How are you, buddy? Can you unmute?
I think I'm there now.
You are, Rich. Welcome
Okay.
to Face.
Good morning, and thank you for having me.
Great to have you, Rich. Are you going to be a screen sharer today?
Sure. What do I got to do that on
Okay,
here?
just scroll at the bottom of the screen. You'll see a green button, screen share.
Oh, screen share. Gotcha. And I will share. I share screen one. I guess that's what I'm on. Share. And now you see my charts there, my
Got them
ES
up there.
charts.
Yeah, Rich.
Okay. This
So,
is.
uh, so Rich, before we get going on the markets, Mandy recommended that I reach out to you and interview you, and
She's
Mandy is
great.
a pro, and so when she recommends someone, I go for it, and I've had a few conversations with you. But before we get to the markets, it's always interesting hearing about someone's journey and how they ended up where they are today. You want to jump in the time machine and
Oh
tell
boy.
us what your first gig in the business was and what you're doing just prior to that?
Well, I was in college just prior to that, and in 1982, I got a job on the floor of the CME on 222 Riverside Drive.
Oh gosh, I
And
worked there too.
yeah, right. Uh, and was a runner, and the 1982, same year the S&P started trading at the Merck, and I clerked and did out trades and worked my way up and finally got an opportunity to trade, and I started trading options. I started actually in the cattle options pit.
Okay.
And because I
Yeah.
was working, and it worked out that I could trade during the day during the cattle hours, because they were just a few hours a day. And from there I moved into the S&P options pit and traded there for several years. And in 1995, we had a really low volatility year. I mean, I go back to show the charts to people that we had weeks where the market traded like $2-3 for the entire week.
Wow.
So I had started trading electronically on the Globex system in its early days. And so I had an opportunity to work and promote Globex, which I did for 9 months, and really learned a lot about electronic trading. And then I went back to the floor and traded in the NASDAQ pit and traded uh, options and futures there. And then
Ever have a bad out trade, Rich?
yeah.
Huh? So explain to people what an out trade is when you're a floor
Well,
trader.
when you're a floor trader, you're yelling and screaming, and you're writing on your cards who you're trading with, and how many contracts you're trading, and the price you're trading at. The worst possible thing to happen is miscommunication, and you don't buy as many contracts as you think you bought, or you and the market goes up and you sold some on the way up, and you come in the morning, and somebody doesn't know your trade, and it's there. 9 times out of 10 they're bad. I think you probably remember it that way too, Dale.
Yeah.
And anyway, that obviously doesn't happen with computer trading. Of course, they have fat finger errors with computer trading, where people meant to punch in one, and they punch in 10 or 100 or 1,000. I mean,
Right.
you still can't have errors, or you can. I do a
There
lot
were
of
people
options.
that lost their seats on a bad out trade.
Oh, for sure.
I remember.
Oh,
You
yeah,
come in
yeah.
the wrong way to uh, one good morning, your career is over. So
Uh, yeah,
anyway,
and in later years, the traders got to where they had trade checkers that would check their trades all
right,
day,
right,
and that eliminated a lot of the problems. But in big pits like the S&Ps or the Eurodollars upstairs, where people were yelling and screaming across a big expanse, yeah, there were some nasty surprises sometimes. And
did you ever knock Danny Top Step Trader off his step into the middle of the pit trying to get something done? Danny Riley?
No, no.
Okay.
And in fact, I'm actually doing some stuff with Danny Riley now. I've known Danny for over 30 years. He's a great guy,
Yeah.
and he's a rough and tumble guy. And
Yeah.
Yeah, a lot of the guys in the pit. I mean, there were ex-football players, ex-hockey players.
Yeah.
In the Eurodollar pit upstairs, it was like stepping into a different planet because they were all over 6 foot tall and like 250
Yeah,
pounds.
it was pretty physical in there.
It got
It's
very
like
physical.
financial rugby. Okay, so let's come back to the present.
Well,
And
so go ahead.
well, in our conversations, I really admire, we're the same generation, and to learn something new is kind of difficult. An old dog. It's hard to teach him new tricks, but that you were passionate enough about developing your system for yourself and for others that you learned how to code.
Yeah, actually, things weren't working, and I wanted a better, some quantitative uh, statistics behind, some of my trade ideas. So I actually
Yeah.
called the guy who used to program for our options group, and I said, "Hey, Dave, I want to do this." And he goes, "Rich, that's great, but you can't hire it done. You're gonna have to learn to do it yourself because." You'll hire somebody to do it, and 2 weeks later they'll come back with an $8,000 or $10,000 bill for coding something for you. Say that's not what I asked for. I said, well, the only thing I know is a little bit of Excel. He says, fine, go to it. So about 4.5 years ago, I took some online courses and started learning to code in Excel, and now I do Excel and VBA. And in 4 years, I probably put about 10,000 hours of coding in. I'm an expert Excel coder, and I'm not too bad at VBA. So between all that, I can do pretty much what everybody can do in Python. There's advantages and disadvantages, but I actually have some programs that I run every day for my people. I have a gap program that gives opening gap statistics and probabilities on whether the gap will be filled or not filled based on a lot of different factors. And my newest program, I'm just getting pretty operational, actually takes a look at the trade throughout the day during each hourly period, some shorter periods of time in the beginning of the day and longer in the end of the day, and gives statistical probabilities of the market, going higher or going lower based on what happened. And
Is that also kind of a short-term program? Like
it's a short-term program.
because the morning gap, of course, is it's not something you use to put on a position trade. It's for an hour or so, right?
Yeah, this is yesterday's price action in my I look at the first 5 minutes and then an open range trade, which is 25 minutes to me. And there's a whole reason why I use that. And then the first hour, and then it goes 10, 11, 12, 1, 2, 3. And I'm still working on the last 30 minutes. And then these numbers this is the range, and then it generates these open and closes relative to the range. And then there's signals that are generated according to where that is in the range. And then I have trigger prices that are in here, and some of this coding I still have work to do, and I look at the range analysis of the entire day, and I'm building statistics down in here, and I have statistics in other programs already to tell me at the end of the day different probabilities, and then all of that information generates, a probability based on a bunch of factors. And I black this out because I have static numbers in here. Probably within a month, I'll have more dynamic numbers that'll change. But there's so many different variables to look at. This program looks at like hundreds of variables. Like my morning gap program, I'll flash this out here. I've already kind of loaded this up, but this looks at where the open is, what was happening yesterday, whether it's a partial gap or whether it's a full gap. I've got
Wow.
so many different variables that I can look at.
Do you ever feel overwhelmed by your own data?
Yeah. I I do and I don't. I mean, I understand it, but you have to. And I'm still learning to use a lot of the data that I have. I have so much data though that there's people will ask me a question about something and I'll say, oh yeah, I can look at that. Like I do. There's a lot of seasonality. You know, you can look at the days of the week. You can look at months of the year. I can eliminate years that I don't want to. You know, what happens if you throw like 2008 out? How does that affect your statistics? What if you throw out 2020 where we had, you know, crazy stuff with COVID?
Yeah.
I am really big on looking at, especially in the stock indexes, at volatility levels. And I'm tailoring my program to like look at the market at different levels of volatility and how it behaves accordingly. You know, if volatility goes up and it gets over a certain level, what happens? If it stays under a certain level, what happens? And it makes a huge difference a lot of times in the statistics. So I've actually built a VIX futures program that, and I have all the VIX contracts all the way back to 2005, and I've eliminated some of them, and I actually look only at the VIX from 2008 forward. But it's still it's a tremendous amount of information, and that program has about 4 million bits of data in it. And you know,
You getting any cues for today, Rich, on the VIX with the Fed meeting?
The VIX program, I haven't. I'm working really. I have nothing on there yet because I haven't really even started using that program. I've put the static data inside of my NASDAQ gap program and my NASDAQ and SPU range programs, but that's my next big project, which I'll probably be starting in about 3 weeks to work with the VIX only. And it's
do you trade on big red event days like the Fed today and the press conference, or sometimes the inflation number has become the big deal? Anything regarding inflation?
Absolutely. You know, I usually, sometimes depending upon what's going on, I'm a big options trader, so a lot of times I'll wait until after the number to take a trade, because you know volatility is usually pumped up before the decision, and then after the decision it comes caving in, and you know, depending upon which way the market moves, you know, it's I'll put on positions, you know, accordingly. But there's a lot to I still have a lot of work to do, and you know, because I program, I'm always improving what I'm doing and always learning from what I'm doing. And like my gap program and my range program are in, like, you know, in 4 years, they're in like their 10th iteration of, you know, where I started. And and I've actually broken both of them down into like 2 different programs to like look at the best of all programs in one. And as I say, I keep improving and gaining insights based on what's happening. And hopefully I'm just looking to keep myself out of poor trades. Like when I find a trade that's a 50-50 trade, it's like a coin toss. I won't touch that. Sometimes a 60% probability trade I'll take because I have supporting chart numbers or levels that I like. But most of the time I don't like to take a trade unless it's, you know, statistically showing 70% or better in my favor. The other thing I do, Dale, is just like you, we're old guys. We probably looked at charts for, I mean, I've been sitting in front of a screen for over 20 years now. You know, we what 50,000 hours, 100,000 hours of charts. Yes. I actually created my time fractal theory of charting, and I have all my charts are color coded. I use standard deviation levels because they work, and that there's a lot to be said about that. And then I have a modified Fibonacci levels that I use, and then my time fractal levels, like this is a time fractal level, and they work exceedingly well. Like here's a time fractal level that we got up to and tested the other day, and I left it on. And every day these things change, but they're really easy to learn to do, and they're amazingly accurate a lot.
Okay.
And
Yeah, you have do you teach all these things to people?
I teach everything. I started a website about a year ago, and the name of my website is Handelstats, Handelsstats, and Handel means to trade in Dutch, because the Dutch were great traders, and the first publicly traded stock in the world was the Dutch East India Company. And
Right.
the first recorded market mania was the tulip bulb mania. So hence,
Yeah, interesting.
hence, that was the inspiration by using Handelstats.
Must have been tough getting around the pit in those wooden shoes, though.
Yeah, and here's this is my website. I just did a study earlier this week. SPX is the low end for the year, and when I do studies and I post them on my website for subscribers, I have PDFs and Excel spreadsheets and things that people can download and look at. And I've got lots of videos on a lot of things, and I put a weekly outlook out, and every day I put out 7 sheets of data. And I give out a free sheet on the basic membership, but then I have these pro daily files, pro webinars, and I'm actually building an options site. And when people come to me, I do a morning opening session every morning. Yeah. And then I can answer questions, after the open, and we go through whatever we're doing that day. I'll answer anybody's question, and I'm pretty accessible. I don't have a lot of subscribers, but I care about the people that come to me, and I care about my programming. I'm pretty enthusiastic about what I've done.
You are, man.
Well,
you're you could go on and on, and I could tell you still, it's amazing. You still have this level of passion for the industry and the markets after all these years. And I just haven't met too many people. The one common thread I see in successful traders is that they all really work very hard, and they all really put in the time, whether it's going over their analysis or building up systems. And I think the most important part, and you talked about things that you did on your own, is that there's some creativity to it too, where you may see a better way to handle certain numbers and input what you see, your trading intuition has led you to. So it's you're a hardworking guy, and I don't think that people could go wrong having someone like you to teach them.
Well, thank you, Dale. I appreciate that, and it's really true. Trading is a lot of work. You got to be passionate about it, but it's also good because there's nothing in the world that takes place that doesn't affect trading some way, shape, or form.
Yeah.
So, and one of the reasons I went this quantitative route too is because everybody's got ideas about, that happens such and such and such, percentage of the time. Well, when you put a quantitative test to those ideas, sometimes your perception is wrong from what the reality is. Right. And that's one of the things I like about going the quantitative route. This is what we're looking at right now is my screen. I every morning I come out with, and these change as the morning goes on. This was like early on. I was looking at where in the ES we're now boarding a full gap, and my ES says that if a full gap, like with 34% probability of going back down and filling, it's not going to happen. And anyway, these are the kinds of statistics that I put out
Start
and
the day with.
that I
Yes.
start the day with. And like
Okay.
yesterday, when we gapped lower, my statistics said, it was like such a high probability that it wasn't going to go back down. Like here's NQ. This was a little while ago. Full gap up means that we're gapping above the prior day's high.
I see.
And
Okay.
and in this situation, it's saying that, and I ran this like before I came on earlier, saying that there's only a 28.71% probability that it will go back down and fill the gap.
Low probability.
Low probability. That means it's not going to happen. I mean,
Yeah.
so I mean, but then I actually break this down into time periods. So sometimes even if it was a 50% probability, I know sometimes that it'll tell me that it will happen after the first hour. So if even if you think you want to trade it, contrary to what it is, you at least
it'll tell you to be more patient and wait.
Tell you to be more patient. Exactly. Okay. So that's what and then it gives me statistics on the probability of going to the prior day's high, at least filling to the high. Like in this case, it said 56% earlier that it will at least go down and fill the high. And some of the stats, sometimes I scratch my head and wonder how they come out the way they do. But the stats are what they are. And of course, it is what you program into it. And there's so many factors. Like last week, I don't remember what day it was. It was like a 60% probability, and I said, well, let me see, what day of the week it is. And so I plugged in the day of the week, and it totally, it went from like 60% to 80% that it would fill. And I don't remember whether it was up or down. I mean, Dale, we've been around for so long.
Don't remind me.
Yeah, but really, and I tell this to people, and you'll understand this, is we've seen so many things happen before that, there's nothing that really surprises us.
Yeah.
Whether it's a big,
because we accept anything and everything happens.
Exactly. So yeah. I mean, and then I mean, sometimes it keeps us from making a trade, and sometimes we say, well, that could happen.
Yeah.
One of the things that I've learned most, especially using the options pricing model and standard deviation levels, is that events happen a lot more often than they're supposed to. That the options pricing model, is wrong, and there's a reason why they don't price that in. It's a longer conversation than we have time for this morning, but nonetheless, it works the vast majority of the time. So you got to go with what works the vast majority of the time. And
you were a little worried about this presentation. It was people are saying that this was the best presentation that they've seen on F.A.C.E. Someone like you, usually I've got guys coming on that are making forecasts with their charts, but Jay said it's unlike anything I've seen ever on ForexAnalytix. Great find, Dale. So, I want to thank you, Rich, for coming here and enlightening, edifying our community, and showcasing your work here today. And having made it through an interview with the, kind of ornery, whatever it is. So you're now my trading warrior brother. And, do you accept it?
Thank you, Dale. I appreciate it. I really, thank you to Mandy for suggesting me, and thank you for reaching out to me. I'm here anytime. I really am passionate about it. Anytime you want to talk to me, anytime you want to interview me, I'll be glad to show you. And as time rolls on, especially when I get that VIX study done, there are things that are going to take place there that are going to absolutely be astounding. I've already got some pretty astounding stuff with that.
Yeah. An 80 VIX before it's over.
Yeah.
Okay. I know. I see what you see. All right. So yeah, anyway, let's keep that for now, and I'll get in touch with you and we'll schedule another one in the fall. And the best way for people to reach you, Rich, would be what, through Twitter or going right to your website?
Go to my website, which is handelstats.com. And
There it is.
On Twitter, I have a public Twitter is Skylane TK, SKYLANETK.
Okay.
And my private Twitter is Handelstats, but I use that. I don't like to send out emails. So I like what the people that get my service, they get like, some of them have never gotten an email. I put out all my stuff on my private Twitter channel, so they can come and log in and download the information, and they log in, and I've got a room now that I've just set up recently with Mr. Topstep, because there's advantages to doing that compared to what I was doing. And anyway,
we're rooting for you and all who hear your words and absorb your work, Rich, and good hunting today. What's the Fed going to do?
I don't think they're going to do anything. I mean, it's an election year, and I heard you guys talking about bonds and notes, and I'm like the same way. I watched the TNX, and I think rates are going to go back down. I think that inflation, if we can get energy prices down a little bit, that will put a hammer on inflation. And I actually, if we get a poor close in crude this week, I don't even know where crude was.
Yeah, under 94.
It's actually my crude chart that I've been saying. I'll pull this up real quick.
We got to run, but
if crude gets down here under 80, closes down lower than last week, it's probably going to go to 89, below 89.45. If it gets below 89.45, it is going to 71.
Okay, good to see that.
That's
all right.
Thank you, Dale.
Well, and that President Biden would be very happy to see your work manifest down there at $70. So would a lot of people driving around this summer for their vacations. Appreciate it, Rich. Thank you so much for your time today, buddy. Good hunting. And that's a wrap. Everyone, remember, don't just count your statistics and don't just count your pips, count your blessings. We'll see everyone tomorrow. Good luck today. As I say, I'd rather react to the reaction than predict it. And we'll see everyone tomorrow. You could join the team in 13 minutes for the morning edge. Thanks again, Rich Miller. Adios, everyone.
Thank you, Dale.
All right, buddy.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.